Hey traders, this is Christian from Hertz Tribeca Trade Group with 3 areas of the market to watch going into the Fed meeting, which is tomorrow, June 15th, Wednesday. So number one, a couple extreme things here. Number one would be the VIX. So let me just go to the chart of the VIX. The VIX is up 45% over the last few days. No doubt an extreme movement. We have seen this a couple times before. We can go back and look through time, which I'll do in a second here, but let's look at this chart here first. So what do I notice here? A couple things. The red line is the 2 standard deviation Bollinger Band. The purple line is 3 standard deviation 3 standard deviation Bollinger Band. So right now we're outside of the 3 standard deviation Bollinger Band. This is really, Bollinger Bands are really good to measure extreme movements. They don't normally stay, especially major indices, don't stay out of Bollinger Bands for long. Taking a look at past movements in the VIX, which I'll do that very quickly. This happened, a couple years ago, back in June, move outside the 3 standard deviation Bollinger Band, move back inside. It doesn't always happen right away, but usually within a day or two. This one, I'm sure you guys remember. August of last year, the VIX got over 50 here briefly. So outside of a 3 standard deviation Bollinger Band, a couple days, and then a move right back in. So, similar kind of move, a little bit more drastic than what we've seen in the last couple of days. But nevertheless, it doesn't stay heightened for very long. A couple other examples, 1, 2, 3 outside of the 3 standard deviation Bollinger Bands and a move back in. Back in the beginning of the year, actually December this was, 2 days outside of the Bollinger Bands and a move back inside. So again, we do have that Brexit. A lot of this is caused about the uncertainty of the Brexit vote, which we have heard at nauseum over the last week. So it could remain heightened for maybe a couple more days, but I don't anticipate it staying here for long. Also, taking a look at the RSI, it's overbought right now. It got up to a 75. Right now it's a 72, still overbought. So that's number one. That's the VIX. Very extreme. We hit 22, but I wouldn't be surprised if we come back in here in the next couple of days, at least inside the Bollinger Bands. Number 2, bonds. Bonds have had a huge run. Taking a look at bond futures /ZB, 30-year Treasury bond futures. Take a look at what we've been doing lately. All of worldwide bonds have rallied, and our bond has followed suit here. So, take a look at what the type of bar that materialized today after a huge run. You see this long tail on here. This looks like a shooting star candle to me. Normally, that follows a reversal. Take a look at the last time we saw a really long wick on this particular candle, and we moved back in. We've stayed heightened, but again, could be just a day or two move back here in bonds, and also overbought. They got overbought back here in February, and they came back in. We're approaching those overbought levels here as well. What do we see today in terms of option activity? Decent size bet here in TLT puts going out to July 29th. So short dated bet. They bought the 130 puts. What did they do this for? They bought this for 84 cents. So a $1.7 million bet that TLT takes a breather here over the next month. So that was the number one option trade that I thought was interesting with bonds. Just the third thing that I find interesting, just moving right along here, is Eurostoxx. Eurostoxx, just like bonds have had an extreme move, just like the VIX has had an extreme move, Eurostoxx have had the same thing. Just in 5 days, they're down 8%. Could you imagine if if the S&P was down 8%? There would be on CNBC Markets in Turmoil special back on. But 8% in just 5 days. If you look at just over the last 3 days, that's where it's really picked up. Over 2% here and 2% the last couple days. So, while people have been talking about the S&P and how the S&P is going to close, very little people are looking at this extreme move that's happening in Eurostoxx, and also what happened today in Eurostoxx ETFs. If I bring in some of the volume that occurred today, how my scanner is set up is in relation to volume versus the 30-day average. So anything that's basically 1 is right in line with 30-day average volume. Anything greater than that is when volume is greater than that. So taking a look at a couple European ETFs, EWQ. What is EWQ? It's France. Normally trades about 800,000 shares a day. Today, 3.2 million shares. EFA, which I'm going to get to EFA in options in just a second, but also traded right around 3 times normal volume. Normally trades 23 million shares, traded 70 million shares today. EZU, another European ETF, normally trades 5 million shares, 17 million shares today. And this went down the line in almost every ETF, every European ETF that you can think of, all traded on heightened volume. DBEU is another one, 4 million shares, normally trades 1.5 million shares. EWU, the UK, traded twice as much volume as normal. HEDJ traded 5.8 million shares, normally trades 2.2 million shares. EWG should be in here as well. But, what does this mean? When you see this much volume at the end of a, I don't know if it's going to be the end of a downturn, but, you could take a look at the VGK ETF. Heightened volume after a 6% move tells me that this could be the end of the move downward, or at least it will get a little bit of possibly a bounce, which is what I'm looking for, possibly Wednesday or Thursday in the U.S. market. I mentioned EWG. What do we see today? And this is a good example. 1.6 million share block hit today after the European close. This was definitely a buy. This was an intermarket sweep order for 1.6 million shares purchased at 24.42. This was all the way at the top end. This was actually above the ask when this trade went up in EWG. That's the Germany ETF. What do we see in options today? Looks like somebody took a shot at EFA, 89,000 contracts, and pretty short dated stuff here. July 59 calls. This was purchased for, if you go to my interesting option activity sheet for today, I did fill in a price here of 18 cents. So not the biggest, trade in terms of notional, $1.6 million to $1.6 million bet. So something, behind that, I do think that all of this activity going into the FOMC, going into the Bank of Japan meeting, pretty extreme movements. I think if anything positive comes out of these meetings, if Yellen is slightly dovish, we could see a really nice bounce, possibly Wednesday or Thursday, given that how oversold European stocks are, how overbought the VIX is, and how overbought bonds are here. So that is what I'm setting up for. I'm looking for a nice bounce coming Wednesday or Thursday. So thank you very much for watching tonight's video. We are also holding an open house in the Tribeca Trade Group trading room. You can find that on my Twitter handle at @CFromhertz, and you can go to our website for any of our products, tribecatradegroup.com. So again, thank you for watching the video, and good luck trading the rest of the week.